Hello, ladies and gentlemen. I'd like to introduce Jordan Jason to the audience. Jordan is the CEO of U.S. Energy Development Corp., a role he has served in since 2014. Jordan was the key driver in transitioning the firm from an Appalachian-based producer to diversifying into multiple basins across the United States. His experience in change management helped the firm navigate through two major corrections in the oil and gas industry. During his tenure, he's worked to strengthen balance sheet, including reducing debt by over 70% at U.S. Energy Development Corp. In the past 5 years, increased cash flow, and as well grew reserves. During that period, the company's management has increased production from 900 barrels a day to almost 5,000 barrels a day. Jordan is a graduate of Johns Hopkins University and has an MBA from Texas Christian University. Previously, Jordan worked for Arnold and Burkholder, doing portfolio management and trading in New York, Connecticut, and London. He's also a director for the Independent Oil and Gas Association of New York and the Lighthouse for the Blind of Fort Worth. I've worked with Jordan for over 2 years now and know him to be a very highly effective CEO, running a diverse suite of assets with a logical and disciplined approach. So, ladies and gentlemen, I'd like to introduce to you Jordan Jason.
I'd like to thank Jim Harden for that kind introduction. We're very grateful for our partnership with Moss Adams. They've been great partners for numerous years, and also would like to thank the participants in Entercom for this conference that I've attended in person, but unfortunately due to today's circumstances, we're presenting virtually. So this is our first time, U.S. Energy's first time presenting at Entercom, and we're extremely happy to be here today. My name is Jordan Jason. I'm the Chief Executive Officer and the Chairman of the Board of U.S. Energy Development Corporation. And presenting with me will also be Brandon Standifer, our Chief Financial Officer. With over 40 years of operational excellence, U.S. Energy seeks to leverage its own financial and operational strengths to invest in, operate, and manage assets. Let's talk about the company. U.S. Energy is a privately held C Corp that my mother and father, Joseph and Judith P. Jason, founded in 1980. Prior to 1980, our family also had working interest in oil and gas wells in Appalachia. We're heavily focused on operations and investments in the lower 48 states, headquartered in Arlington, Texas, with over 50 plus employees that have experience in oil and gas operations, sales and marketing, and investor services. Our partnership oversight. We've deployed over $1.5 billion among 35 managed oil and gas limited partnerships over the past 15 years. U.S. Energy has a GP-LP model that it focuses on to capitalize our oil and gas activities. We have investments in oil and gas operated and non-operated properties, infrastructure, pipeline and facilities, saltwater disposal, and mineral interests. Oversight of all oil and gas related processes, including operations, landowner relations, state and federal regulators, insurance carriers, HSC, and others. Talk about our operational excellence. Active in 8 major basins, direct ownership interests or management in approximately 2,000 oil and gas natural wells and natural gas wells, have participated with over 65 industry partners. Our team is comprised of a flat organization. We can make decisions quickly and efficiently. I have 11 years of experience with U.S. Energy. As Jim mentioned, I'm a graduate of Johns Hopkins University and have my MBA from TCU. Matthew Like, who heads up our capital raises through our GP-LP model, has 15 years of experience at U.S. Energy. He's also a director on the board, and he is a graduate of Canisius College. Brandon Standifer, our Chief Financial Officer, has recently joined U.S. Energy over the past several years and has made a great impact on the financial management of the firm. He's a graduate also of Brigham Young University and MBA student at Kellogg University at this point. Todd Whitmer, our VP of Geology and New Ventures, has close to 20 years at U.S. Energy, also has his master's in geology from the University at Buffalo. Kevin Duncan is our Vice President of Operations. He recently joined U.S. Energy in January of 2020 with over 35 years of experience in private oil and gas operations, as well as working for private equity-backed operators as well. He's a graduate of Texas A&M University. Greg Brown, our Vice President of Land and Legal, has been with U.S. Energy for approximately 2 years, but has over 20 years of experience in land management, lease negotiations, production participation agreements, and other agreements. Our people, which are our most valuable asset. We have over 50 people or employees located between Texas and New York. We have over 40 years of experience in reservoir. We have over 50 years of operational experience, 35 years plus of geological experience on staff, 30 years of land and legal experience, and over 100 years of combined oil and gas accounting experience. Core values and our focus. This is what drives our businesses, and this is what we anchor around. Our core values are 6: investor first, trustworthy and sincere, collaborative, responsible to all stakeholders, innovative, passionate, and driven. These are values that we focus on a daily basis, that we refresh on a quarterly basis, and all new employees are required to learn and understand what these core values mean to the firm. Our core focus, which is comprised of our purpose, our niche, our 10-year target. Our purpose is to drive superior results for our partners through performance and communication. Our niche, world-class direct energy investments. Our 10-year target, most well-known and respected direct energy investment company in the United States. I'd like to add on to this as well from a quote from Marcus Lamont, which is success equals people plus process plus product. We feel at U.S. Energy that we have great people, we have great processes in place, and we have a great product. So this is what has led to our success over the past 40 years in upstream oil and gas. The recent focus, as we're all aware of, or most of us are aware of, is ESG and how it impacts upstream and midstream oil and gas companies. It's been a headline for several years, and U.S. Energy is very aware of its impact. U.S. Energy believes that we are not only responsible to our investors, our partners, and our colleagues, we are equally responsible to our environments. U.S. Energy has created an ESG committee in early 2020 that is focused on initiatives important to the company and its employees. We're also working towards an ISO 14001 and a 26001 certification. We are heavily focused on our impact throughout ESG and work with it internally with our employees and our teammates, as well as outside stakeholder groups. At this point, I'd like to hand it over to our CFO, Brandon Standifer. Thank you.
So thank you, Jordan. As you had mentioned earlier, U.S. Energy has been around for the last 40 years. We look at this as a tremendous success in an industry that has unfortunately seen many downturns, including the most recent. As a leadership team, our primary focus has been on strengthening the balance sheet during the good years and making the hard but necessary changes during the lean years. Another reason for our success and longevity relates to our strong ties to our partners and investors. We currently manage and operate on behalf of 35 partnerships, including back office support, reporting, audits, and tax work. Our investors continue to be our primary focus as we navigate through the next 6 months and beyond. In addition to our investors, we have made and continued effort to build relationships with many of you listening today. This includes through consulting and financing arrangements to joint ventures and individual investments. We would welcome the opportunity to continue to build those relationships during the short and long term. As I mentioned on the previous slide, strengthening the balance sheet has been a top priority over the previous 3 to 5 years. We worked diligently to reduce the company's leverage in each of the last 4 years, which we feel strongly has positioned us to continue to make investments during the current economic environment. During this same time period, we have never breached a covenant with our primary lender. Finally, over the last 3 years, we have seen a growth in PDP reserves by 30% from 2017 to 2018 and 50% from 2017 to 2019. We've put this slide in here today to discuss our response to COVID-19. We feel there are many of you who have taken a similar response. The response at US Energy was with all disciplines within the company. Our operations team reviewed all wells, all fields, and together with our finance department determined break-even metrics within each of our operated areas. Our land team immediately got on the phone with lease owners to discuss our path forward, including amending, if necessary, JOAs. As the CFO, I sat down with Jordan to discuss every line of the income statement to determine what to cut and what to keep. Our IT department had previously set up processes to allow all employees to work from home, and we instituted a work from home policy during Q2 of 2020. As a company, we are extremely fortunate to have great employees, vendors, and contractors who were and are willing to work with us during this time. Additionally, as employees came back to work, we ensured we had the necessary PPE equipment to safeguard those employees as they came back to the office. So during late 2019, we were introduced to Washington Federal Bank, who has a division that is focused on the energy space. The team at Washington Federal worked quickly and efficiently to facilitate the closing of a credit facility during a very difficult environment within the industry. I can't say enough about the team over at Washington Federal, including Rusty Stair, who helped get us to the finish line. As a background, Washington Federal has been in operation since 1917 and is a top-ranked capitalized, publicly traded U.S. bank. They were voted the best bank in 5 states by Money.com for 3 years running. So thank you to the folks over at Washington Federal. We appreciate the efforts in getting us to the finish line. As you can see from the slide, we've had many opportunities to enter into joint ventures within the major basins across the United States. As a company, we've put an increased emphasis on developing these partnerships over the past 3 years and have very recently seen opportunities to expand these relationships and ventures going forward. We are actively looking for new opportunities that align with our current portfolio and welcome new relationships and opportunities as they arise. From an A&D perspective, our A&D team has been very active over the last 12 to 18 months, and currently we are working on and evaluating approximately 25 transactions per week. Our A&D process consists of a methodical and technical approach to each of the opportunities presented. Our A&D team is comprised of analysts, geologists, and engineers. As a company, we aren't biased based on the size of a deal. We have closed transactions ranging from $250,000 to $20 million over the last 6 months and are capable of expanding that transaction size to $100 million depending on the opportunity. One of US Energy's strengths is our ability to allow for flexibility when it comes to deal terms, and with many of our recent transactions, we've had varying deal terms. As a company, our primary focus is within most of the major basins in the lower 48, including the Permian, DJ, Eagle Ford, and Powder River basins. We understand that the capital markets are constrained right now, and as a result, we believe there are opportunities to invest in near-term development opportunities over the next 3 to 18 months. And we can provide an additional source of capital for budgets that may have been cut for the 2020 and 2021 calendar year. We are interested in most oil and gas investments, including PUD and DUC development, PDP, including minerals and overrides, and high-grade proven areas in good neighborhoods. Most recently, we've completed 5 transactions within Loving, Ward, and Eddy counties, with a total of $90 million that has been deployed or will be deployed over the next 12 months. In addition to the Permian acquisitions, we've closed on 4 opportunities within the Powder River Basin and have deployed $20 million related to those transactions. As it relates to the divestitures of the company, we will or have closed on in the near future the divestiture of over 1,600 wells located in New York and Pennsylvania. This will allow the company to focus on our horizontal plays within the basins previously mentioned. There's no secret to our operational approach as it relates to our producing assets or potential assets. Our primary objective is to establish, optimize, and hold constant our cash flow at the wellhead. Our operation team focuses on a 5-step approach, including 1, a detailed LOE review, which includes allocation of resources, 2, a financial assessment of each field and each well to determine future upside and potential as it relates to proved and unproved reserves, 3, ensuring compliance with all regulations as it relates to health, safety, environment, 4, reviewing all pre-existing contracts to identify gaps and opportunities for improvement, and 5, making recommendations and executing on the approved projects. In Q4 of 2019, the company acquired 1,000 barrels of oil per day of horizontal Wolfcamp production within the Permian Basin. Applying the approach mentioned in the previous slide, the company was able to reduce the field level LOE per BOE by 27.5% in a short period of time. This represented a field level savings of over $2.5 million annually. Additionally, during that same period, we acquired a waterflood project in West Texas. Similar results were achieved in this field as in the field previously mentioned. Additional upside opportunities were identified in both of these project areas, with drilling capital being deployed during Q2 of 2020 in the Permian Basin. Continuing our conversations on our operational approach, the team performs a thorough review of project areas for existing PDP, offset data, infrastructure, and new development opportunities. This process allows us to identify low-hanging fruit and allocating resources to projects that add value with minimal cost. Our strong relationships with vendors allow us to use economies of scale to negotiate and execute on contracts within the areas of operation. As we develop each of the projects identified, we specifically review parent-child relationships to optimize recoverable reserves. We engage with industry experts within the existing basin who support those projects. And finally, we fine-tune our facility and infrastructure timelines to minimize costs associated with flowback and hauling. Utilizing the techniques mentioned in the previous slide, U.S. Energy recently finished drilling a 3-well pad in Ward County, Texas. Each of the wells drilled was on average 46% quicker than the previous wells drilled within the field. All of this was achieved while at a cost 28% lower for this pad. Completions are scheduled for Q4 of 2020. U.S. Energy recently finished drilling a 6-well pad in Zavala County, Texas, and are currently undergoing completion operations with expected online dates of September of 2020. We saw average cost reductions of 25% to 50% through debundling of services. This will result in savings of $2 million per well. So our primary position over the last 5 years has been within Frio and Zavala County of South Texas. During that time, we have drilled and completed over 75 horizontal wells. Over that same time period, we have seen a reduction in intangible drilling costs due to quicker drill times and negotiation of drilling service costs. All of this means money back to our investors of $5 to $7 million annually. So to recap, we keep it simple. Our investor first culture means that every decision is based on our responsibility to add value to our stakeholders. As a company with over 40 years of history, we understand the industry. We understand the needs of the industry, and we can align our interests to meet the needs of our investors and our stakeholders. Again, we just wanted to thank Intercom for the opportunity to present today in this virtual format. If any of you have any questions, thoughts, or opportunities that you feel would lend themselves to a partner in this space, I'd ask that you reach out to myself or Todd Whitmer, who is our Vice President of Corporate Development. Thank you.
Jordan and Brandon, thank you so much for that presentation. Very informative. I want to jump in with some Q&A that we have following this presentation. And the first is for those of us who have been in the energy industry, for a long time, for a lifetime, we've certainly seen a lot of cycles, especially, over the last, 5-10 years. How has U.S. Energy navigated the business disruptions, the cycles that we've seen, specifically since your tenure, Jordan, at the company?
Dan, this is Jordan, and thank you for the question. I'd point specifically to our navigation of COVID over the past 5 to 6 months. And there's one word that sticks with me, which is focus. Our entire team is focused and has the experience to navigate these types of environments that we're seeing currently. And just for an example, over the past 5 or 6 months, Brandon and I have a morning meeting each morning where we go over, are we free cash flow positive today? Are our fields free cash flow positive? And what other hurdles and stalls and objections are we going to be facing over the next 6 months, the next 3 years, the next 5? So I think the focus and the experience of the team, particularly focused on free cash flow, has allowed us to navigate these times, possibly more easily than we've been able to do in the past. So
I'll do a follow-up question to that, and that is, what technologies do you think or are you looking at to deploy to create efficiencies, whether it's for oilfield service and for or for drilling operations that might continue to improve that efficiencies that you guys are experiencing?
yeah, we're heavily focused on innovation, and I would say that each department has their own levers to pull, and we encourage our employees and teammates to test those levers. They can't be afraid to fail at certain times, but we want them to explore levers throughout the firm, throughout their respective expertise, and do the best that they can to help reduce costs, increase production, and increase the profitability for our investors and for the firm.
Great. I mean, certainly more with less. And Brandon, do feel free to jump in on any of those questions if you have something to add. Don't want to exclude you in that.
I'd actually love to speak to the first question. I think one thing that differentiates U.S. Energy is our ability to act quickly. While a lot of companies are held under, the shareholders or board of directors, we do have an independent board of directors. But during this most recent crisis, we reacted very quickly, very methodically to make decisions. We weren't waiting months to take action on cutting costs, on reaching out to our field vendors, on reaching out to the lease owners. All of this was done within a week. And so I think because of that ability to react quickly, we're able to manage our balance sheet and maintain strong cash flow as we make those decisions.
Yeah, and strong relationships with those vendors if you were communicating with them.
Exactly.
On a prioritization basis, would you say that you guys prioritize operating assets or non-operated assets?
No, that's an interesting question. Over time, that's changed, and it changes based on the opportunities that we're reviewing on a weekly and monthly and annual basis. So when we're looking at 25 different deals on a weekly basis, I'd say historically, 2/3 of those would be from an operated standpoint. And that's just where the opportunities seem to be over the past several years. Over the past 12 months, we've seen a great deal of high quality, non-operated deals as well. So if you looked at U.S. Energy 5 years ago, we probably operated 50% of our reserves. Today, we operate 85% of our reserves, but I would imagine that would continue to reverse back to non-operated as we've put significant dollars to work with great high quality operators in great neighborhoods, great acreage positions that will be developed over the next 12 to 24 months. So we're flexible as a partner, and there's some operators that are not willing to sell, but maybe willing to look for a non-operated working interest JV partner And as you can see in the deck, we're in numerous situations like that, and especially in today's environment, we're seeing great opportunities from the non-op standpoint.
And I think to add to what Jordan's saying, because I think everything he said is exactly correct. To us, our primary goal is our dedication to our investors. So if we feel like investments in the non-op space will yield better results to our investors, we feel like that's where we will deploy our capital. If we feel like those opportunities are in operated assets, then we feel like that's where we're going to deploy our capital. We are an investor first mentality. It was one of our behaviors. It was one of our core values, and we maintain that as we look at these investments as they arise.
Yeah, so non-op, and Brandon, you mentioned kind of your ability to make decisions, maybe be more agile, I guess is what I want to say. It speaks to flexibility. You mentioned it multiple times in the presentation. What makes you more flexible? Is it that you can do non-op, op? Is it the flexibility of being able to kind of put it into gear and get up to speed on opportunities quicker?
So,
Yeah,
sorry, go ahead, Brandon.
yeah. So I think as it relates to flexibility, there are a lot of institutions, there are a lot of banks or lending institutions that operate under one sort of set of guidelines, right? And I think for us, we look at that and say, hey, we can do that, but we can also do this. As it relates to an investment, if we want to look at a joint venture and put some of the drilling dollars up front, we can do that. If we want to co-invest with an operated partner, we can do that. If we want to set up some sort of reversionary interest as it relates to returns on a specific project, we can do that. And so I think all of that sort of speaks to flexibility, and we maintain an open mind when it comes to any type of investment.
And Brandon, just to add on to that, Brandon, as well, I would say that the surety of close that we have as a partner and our ability from a financial modeling standpoint to navigate complex structures and financial modeling in a timely manner have made us a preferred partner with many large operators, and also companies our size, more of the mid-sized to smaller sized operators as well. We move quickly, we're decisive, we make sure that we check all of our boxes, but we're very flexible and creative with structures.
Yeah, it's great. Certainly in this environment, that is a significant advantage. I know we can probably talk about this next question for the rest of the day, but what's U.S. Energy's outlook over the next, and let's say 1, 3, and 5 years? Try and kind of break it down into those time frames.
Dan, we'll go like a layer higher, which I would say is we're not necessarily focused exactly on what's going to happen in 1, 3, and 5 years. Our feeling at U.S. Energy is that great projects are always going to need additional capital, and great partners are always going to be looking for possibly good partners as well. So I think that we're going to stay focused on good projects, good operators, and good partners that can help us grow the firm and provide a great rate of return for our investors. So I don't think there's going to be a shortage of good projects to invest in North American upstream oil and gas over the next 5 years. We just need to be very, very selective. We need to find the right partners, and we need to be able to execute.
Brandon, anything to add on that?
No, I mean, I would tend to agree with what Jordan's saying. I think the industry adapts and they move forward. But I think as it relates to the current economic environment, I think we see demand slowly coming back. I think right now there's a lot of talk about the second wave, but eventually over the next 1 to 3 to 5 years, we will see demand come back. We will see a need for oil and gas as a form of energy. And, we hope that for the next 20 years, for the next 50 years, for the next 100 years, that oil and gas continues to be a player in the energy space.
Yeah, and I guess, and this is an area where Intercom does a tremendous amount of consulting. We see the rise of ESG and the importance of that. Certainly within all markets, but certainly within oil and gas. Tell me a little bit more about your ESG strategy, your push to focus on ESG and build a culture there at U.S. Energy around ESG.
I believe that ESG has been part of, upstream oil and gas since I've been involved for 11 years. Most oil and gas, if not all of them, are very focused on protecting the environment. The publicly traded companies need to be and are forced to be focused on governance and also on the social responsibility. I've seen the industry very focused on ESG over the past 11 years. Now, was it as formal and as disciplined approach as we're seeing now in this movement going forward? Not as much 11 years ago, but there were still aspects of it through upstream oil and gas. What we've done is we've started off internally and we created an ESG committee made up of 5 employees and also one of our outside directors. And what we've been doing is mapping out our ESG steps internally and then begin to implement those and eventually audit those steps to earn some of the certifications that I mentioned in the deck. So a key step for us was, as a C Corp, which is privately held, we've now implemented a board of directors that is majority independent. And while we're not required to do that by our bylaws or by any other regulatory body, we thought it was necessary to continue to make progress. So we're aware of the movements of the industry. We've embraced them. Now we need to begin to implement them further, test them, and audit those. And it has flowed remarkably throughout our firm because it really started with our employees' input and then also talking to some of our outside stakeholders and asking them and surveying them to come up with a list of activities that tie back to ESG that U.S. Energy can implement. And, there's a lot of documentation that supports firms that are focused on ESG have better performance over the longer term. So U.S. Energy is definitely aware of it. We've embraced it, and it has spread throughout the culture of our firm. And I think we're going to make some very progressive steps forward in 2020 and 2021.
Excellent. Yeah, which is where you need to be. And it sounds like you guys are already on that journey, which is fantastic. We have just a few more minutes, it looks like. I have a couple questions left. The first part is during these uncertain times, what has U.S. Energy done to increase the diversity of your revenue streams?
So what we've done is we've continued to strategically map out and perform research on different channels within the upstream oil and gas space that would help us diversify our revenue streams and grow our revenue streams. And one of those has been with contract operating, as far as that's become a hot topic over the past 6 to 9 months. And with 40 years of oil and gas experience and managing partnerships and also operated assets in all of these different basins, we feel that we'd be a great candidate for creditors that are looking to possibly make a change in the management team or assets that may be stranded where the current owners are looking to make some change at some point in time. So we've been working on that, as well as looking at other different types of opportunities, such as this new focus on non-op working interest, which was not necessarily much of our focus over the past 12 to 24 months, but has really spiked in the last 6 to 8 months. So, we've been looking at different avenues to, once again, keep our costs flat while increasing revenues. And those are 2 examples of avenues that we're exploring currently.
Excellent. Brandon, anything to add on that? And then I have your big takeaway from the meeting. Or from the
No, I feel like Jordan spoke to it directly. I think diversification in this space is hard to do. But the couple of examples that Jordan gave, I think, allow us to diversify a little bit from, having all the eggs in one basket, meaning the operated basket, to, hey, now we're expanding into a non-operated basket. We're expanding into minerals basket. We're expanding into, overrides or whatever it might be, so that, we aren't just tied to our operations.
Gotcha. I want to remind everybody that you guys you're available for one-on-one meetings. So I want to encourage people, if after watching this presentation, they want to chat with you, there's some availability on one-on-one, so you can go on and register, sign up for those. And then as we close, what's the one big thing you want viewers, attendees of the Oil and Gas Conference to take away about U.S. Energy?
That we've been here for 40 years. We've remained free cash flow positive even at $20 oil, which means that we are willing and able to take the necessary steps to protect the company, to protect our partners, our investors' interests, that we're investor first focused. But the lessons that we've learned over the past 40 years and the financial position that we're in right now make us a great potential partner at multiple levels. And our flexibility and surety of close amplifies that. So we'd like to be considered as a good partner and hopefully expand our relationships throughout the lower 48 and continue to grow. And also, I feel as a partner with all the years of experience that we do have, that we can provide knowledge and hopefully have or will lead to a better outcome for all parties that are involved in particular projects.
Listen, I really appreciate your time. Loved your presentation. Again, encourage people to sign up for one-on-one meetings with you. Thank you guys for supporting the Oil and Gas Conference. And we will be closing the session.
Thank you,
Thank
Dan.
you, Dan.
Really appreciate it.